Good afternoon, everybody. Would you be kind enough to tell me if you can hear my voice and see my screens okay? Okay, we're going to wait about 2 minutes here. There are still people logging on. Want to make sure that everybody gets in and has an opportunity to participate today. So just sit tight here. It's 4:03 p.m. We'll get started in, let's say, 2 more minutes. We'll give everybody here 2 more minutes to file in. We will get the prerequisite PowerPoint presentation, let everybody know what's going on here. And again, about 2 more minutes to go. We'll get started here. Stand by and sit tight. Okay, 1 more minute to go, and then we'll get started. 1 more minute to go. Okay, that's plenty of time for the stragglers coming in late here today. I appreciate your patience. It's a little much easier to do that than have one or two people come in and start asking questions about things you just spoke about. So we're ready to get started. My name is Michael. I'm the president and co-founder here at backtothefuturetrading.com. We are an engineering indicator company servicing the futures, forex, equities, and now cryptocurrency space for close to 15 years now, with a near perfect Trustpilot score of 4.9 out of 5. We endeavor to educate and innovate instead of sell and market. So if you're not horribly impressed with our graphics and web page and sales process, we don't force things down people's throats. We don't ram high pressure sales deals in front of people. We want you to believe in the product first, feel comfortable with it, and move forward based on trust as opposed to glitz and glam and guru pressure. So always like to let people know that before we get started. We are different from every other vendor, every other trading company. We'll look at some very specific examples here in less than 5 minutes. Insofar as our worldview is concerned, we don't believe that the answer and the solution to trading is more and more and more education, more and more fancier lagging indicators, more and more guru exposure, journaling every day. Dear diary, I lost more money and I'm not sure I understand why. See you tomorrow. We believe the game is essentially rigged and fixed, that large trading institutions, investment companies, people on par with Jamie Dimon's crew over at JP Morgan have a plan every morning, and you don't have access to that. You don't get it. And so we built our own machinery to print our own invitations to the party, our own membership badges to the country club. And so to prove the predictability of markets, we do a really strange thing. In fact, as far as I know, we are the only company in the world that markets this way. We give you the times and directions in advance for popular instruments like the E-mini S&P, Dow, and NASDAQ, for oil and gold futures, for Ethereum and the euro currency, the euro dollar, 2 days before we get together for a webinar. And then on Thursday, which is today, we sort of look at how it did. If the times bore any resemblance to what the markets actually did, insofar as how they moved. And we ask that you sort of judge us on those results. Now, spoiler alert, we've been doing 50 webinars a year for close to 15 years. That's what, 600 or 700 webinars later, with a 4.9 out of 5 customer rating. We're going to see some good stuff today, and I'm excited to walk you through all that. We believe the answers and the solutions to the 95% of traders who are failing lies in the data. These are patterns that exist in reams and reams of historical data on par with thousands of bars, can be analyzed, they can be scrutinized. And so the software works in a very unconventional way. I'll show you here a brief diagram that explains how the program works. How many vendors actually kind of go into some detail on how their little black box actually does what it does. So if you picture with me a calendar, we'll kind of make it into a crisscross checkerboard 5-day calendar, 5 trading days, not counting Sunday. Week 1, week 2, week 3, week 4. Today being Thursday, we can ask the software to go back and look at prior Thursdays. Look what happened last week. Look what happened the week before that. And we can ask the software to go through Thursdays, or go through Wednesdays, or go through Tuesdays and answer a specific question. We can ask the algorithm, are there any times in the past where markets are being driven up or driven down consistently? And if the answer is yes, we get a target, we get a signal. So if you're participating in our webinar forecast program, you had access, for example, to these maps of time. And so as you scroll down, you'll see oil futures, gold futures, the DAX, Euro currency, E-mini Dow. And here's a fun little nugget. This is the E-mini NASDAQ. And all of the times on the top colored blue were the times that the software over the past several Thursdays discovered targets. These were times where the algorithm uncovered behavioral malfeasance, institutional chicanery, and shenanigans. These are times that, for whatever reason, were repetitively driving prices lower. They're not times that I've made up. They're not times that my guru acumen distilled and distributed out to you. These times existed on these time maps predictively 2 days ago for today, because over the last several Thursdays, prices have been driven down over and over again. That's the only reason those times are there. They're a behavior pattern, a pattern that may potentially repeat. And we'll see in a moment if they did. Conversely, all of the white times on the bottom represented times we were expecting potential up movement. Again, not because of some squirrely black box algorithm. Those times exist because recently they keep driving prices higher at those times. That's it. And so it's unbelievable in that no one's ever shown this to many of you in the radius of my electronic voice here today. You've been told the opposite. The markets are random. The markets are reacting to news events. The markets are reacting to reports. The markets are fair and efficient, and we all have access to the same information and determine the value of the instrument in real time. Horsepucky. The markets are a glorified global casino, and the house controls who wins and loses. Instead of Caesar's Palace and the Bellagio and the Paris Hotel, we have Goldman Sachs, Credit Suisse, and Deutsche Bank. People who invariably, no matter how much they lose when they gamble, get their money back. I want you to go to a casino and lose some money this weekend and go to the manager and ask for the money you lost back. I made some bad bets. They'll escort you to the front door. But if you had investments in SVG and if you bought low interest rate bonds back in the heyday when money was free and now the bonds have lost money, your buddies over at the Federal Reserve and all over the world are happy to hand out all that money you lost back. The game is rigged. And I believe those people are the source of these times. So when we come and look at what happened 2 days later at these times, this is a live chart right now. When we come and look at what happened at these times, you're going to see a chart that doesn't look anything like you've ever seen before. We'll kind of push it up together here. All of these signals were the times that we gave you 2 days ago. And the chart is sort of divided into two halves. We are the only company in the world that tells you when potential movements are coming in the future. We'll tell you what direction to expect them to go. So all of the signals to the right of the white dotted line are probable futures, times that for, I believe, institutional reasons are being driven upwards or downwards over and over again often enough that the possibility of the pattern happening again is very high. Now, how do we know that it's going to happen again, potentially? Well, we can look and see what happened at the times we were expecting things to happen. So, for example, we'll pick out some of the lower hanging fruit, right? 2 days ago, the program warned all of us to look for a down move at 227. And when we come and look, the software has marked that moment with a dot, a blue dot corresponding to the blue predictive indication at the bottom of the screen in the histogram. And so when we arrive at 227, we see that there are basically 3 pieces of information we can harvest from it as a statistically relevant edge in a trading plan. Number 1, we know the time of the potential move, the beginning, clock's ticking. We know the direction the market is predicted to move. And third, we know the time that the movement is likely to stop by. In this case, 254. And when we look at the entirety of the trading session, we start to get this sense, this feeling that more often than not, the times that we were expecting movements to occur are lining up with the actual times that the moves were expected to begin. And in the case of 1057 and 1131 and 1202 and 1223 and 102, many of those times are the absolute bottom or top of those moves. And as we sort of work backwards into the day, we have the framework of a trade system. We have information that we can apply with rules. Where will we enter? Where will we exit? When will we get in? When will we get out? But the system only works if the times were predictive. The system will only work if what we were predicting to come true actually took place. These are the times, for example, from yesterday. And can you guys see what's happening at the blue and the white dot times? When the software is warning us for yesterday of a down move at 10:03, from a signal that you've had since Tuesday. And that move is expected to last until 10:15, when price is expected to go higher until 10:25. We see 10:25 is the high of the move, the pullback. Many of the signals, 11:37, 12:02, 11:52, and 12:26, represent the highs of the moves. And the profit is being taken at 11:44 and 12:16 and 12:48 and 1:05. The buying pressure times are behaving as expected. If you're a longer term swing trader, let me just not forget you in this conversation, as I have a tendency to do. This works equally as well on longer time frames in every market: SPY, QQQ, Tesla, Amazon, Netflix, GameStop if you're living on the edge. And that same infrastructure can be relied upon for puts and calls and spreads and butterflies and iron condors. Oh my gosh, so many potentials. If we can rely on the fact that the software is warning us of a move down, warning us of a move up, warning us of a move down, September 22nd, warning us that the S&P will rise until October 31st. And while it doesn't sustain, it drops at October 31st. A rise until December 14th, a drop until December 23rd, a rise until January 17th, a rise until February 23rd, and now the next surge is expected March 29th. The daily charts can provide accurate details as to potential longer term movements, and there is no one time frame that works better than another. All time frames work equally well. If you're an existing customer, we are referencing a trading day origination mode with a source of 3 followed by 3 zeros and a swing strength of 5. One of the things I'd like to do is talk a little bit about the signals versus the setup. So when we come and analyze some of these markets to see if the predictive times worked or not, we can pull up the signals, and in this case reference the euro US dollar for today, using the signals that we were expecting to see on the 5-minute chart. And again, just to remind everyone, the signals that we're studying were provided to everyone who is a part of our evaluation program. And you'll see as we scroll down through the different instruments that everything I'm discussing with you is a time and a direction and a plan that was published 2 days before the webinar. I can't emphasize this enough because many times our sales staff will get requests for trials. I want to watch it live. And I explained to people that you did watch it live. We published these times 2 days ago. Watching the phenomenon occur over and over again on your computer doesn't change the miracle that you're about to see. It's sort of like asking Jesus to come back a couple times. Hey, I missed your first act. We got a bunch of lepers back here. You want to give it another go now that we're all watching? No, I already did it. Anyway, when we come and look at what the euro actually did, the signals are the pieces of information that are raw in nature, meaning if I ask, did it go up at 740, people will say yes. Did it go down at 825? The answer is yes. It stalls here and drops at 845, so I'll say no. It goes sideways until 10:05, and we finish where we start at 9:30. At 10:05, if I asked everyone here on the euro US dollar, did the market go up at the time that it was predicted to? We can agree corporately that it rose until 1110. We can see that 1110 represented the apex of the move. And the market did in fact drop and finish lower than it started at 1110. And then the trend resumes at 1150 until when? 1240, when 1235 represents the high of the session that morning. The market drops from 1240 until 235, where we kind of hold the fort now for close to an hour. And then finally the drop at 340, falling down. And we can look at the entirety of the euro and its signals and see day after day, 2 days of signals in their fullness of prediction, that most of the times represent actual highs and lows in the market. And as we move backward in time, we'll see that the forecasts are well in line with our expectations at the signals. Meaning if we are waiting for a white time, it goes up. If we're waiting for a blue time, it goes down or finishes where it starts about 6 or 7 times out of 10. So that's what I mean by the signal. The raw data without any type of rules or constraints or trading system. A general appreciation for the fact that about 60 to 70% of the time, those signals are doing what we expect them to do. The challenge arises when we slide into the setup. How will we trade these signals potentially with rules? And so I challenge a lot of people on Facebook groups that are posting these end of day results in the various marketing manners. And I'll ask flat out, what was the entry? What was the exit? What was your stop? Where did you break even? How did you manage the trade when you were in it? And I take a small amount of pleasure in harassing the marketing companies for the vacuum of information. You see, most companies in the space I live in are very vague about a setup. And they'll use guru words. They'll tell us about the platinum package, and if we're members of the enlightened member area for just $9.95 a month, we'll get the secret rules. Well, the fun part of the webinar on Thursday is I teach the rules for the trades before we get to the times we're expecting. Not to harp too much on Jesus, but I'm essentially going to walk on water today and then turn that water into wine. Not only did the signals arrive and work about 60 to 70% of the time, but the setups were actually net profitable. So our first setup involves a condition known as signal with trend. A signal with trend is simply aligning the moment of entry with a trend filter. And in this example, we're using a 120 period moving average. And so when we arrive at a buying pressure time, we enter at the close of that candle, in this case, a 3-minute candle. My exit will be the close of the opposite selling pressure signal. There's a window of time available to us. Fun fact, most traders exit trades too soon. You don't hold on long enough. The phrase left money on the table. If it were a drinking game, we would die from alcohol poisoning. Our stop is going to be a dynamic, elastic stop, but based on a concrete, discrete number. our stop will be 1.5, 1.5 average true range values away from the low of the candle or the high of the candle, 1 to 2 ticks below these white and blue lines. And so at the following signal we enter at the close, the average true range is smaller because the volatility is lower. We enter at the close and we exit at the close of the 703 signal. The following signal with trend begins at the close of the 712 candle and ends at the close of the 727 candle. Our stop here is slightly larger, but still 1.5 average true range values of the 3-minute S&P E-mini candle. Now, there's a variation of the signal with trend called a crossover. If a buying pressure signal starts out below our 120 exponential moving average, and it eventually crosses over that moving average and closes above it, we enter at the close of the crossover candle. Now that it has closed above the moving average, our stop is 1 to 2 ticks below the crossover candle. And we hold until the opposite signal candle close. Enter at the close, exit at the close. That is a crossover signal. So we're participating later in the move. Side note, some customers will put a minimum number of bars in their trading plan. If it crosses over 1 bar before the counter trend signal, some people won't take it. But for the purposes of our demonstration, I want the rules to be simple so that everyone can follow what I'm about to show them. The following signal is called a puncture. It's a weird signal. And rather than use the same graphic, I feel like James Taylor singing Fire and Rain for the 5,000th time with this slide. I want to use Microsoft Paint, the ultimate illustrator. If we have an uptrend and we had our buying pressure signal and we got in the move and we exited at the selling pressure signal, we had stop lines, and then the selling pressure signal had a stop line. We want to participate in the trend. We want to be buyers if the trend is sloping upwards and rising. And we were afforded an opportunity to do that at the signal with trend, the SWT. If you like acronyms, you're going to have a fairly pleasurable webinar today. When we get to this counter trend signal, though, it's a danger sign. Warning, sellers usually live in this hole. You are on a street filled with sellers in terms of the behavior patterns we've been measuring. And so our initial impression with this signal is to not buy just yet, because we may be walking into a closet filled with Chinese murder hornets. Asian murder hornets, there's no such thing as a good hornet, I don't think. It could come from Rhode Island. If it's a hornet, it's still not a good sign. We're thinking, however, that at the selling pressure signal, one of two potential things should happen. Either price should fall again like it has lately, or the market going into a distribution phase, people are going to take profit up here and the market will go sideways until the next buying pressure signal. And so these are two possibilities that should occur. based off of this existing behavior pattern. Now, what happens if that doesn't happen? What happens if instead the market goes up a little bit, and then it goes up a little bit more, and then it goes up a little bit more? What happens if that happens? Well, if that starts to happen, Larry, this is called a puncture trade. And a puncture trade is sort of like a breakout based on time signals. What we're in essence identifying is an opportunity. The people who normally sell at this time are nowhere to be found. The banks have changed their mind. Imagine back in the 1700s, someone challenges you to a duel because you called his wife chubby in the tavern that night. I challenge you, sir, to a duel at dawn with pistols. And then you show up at dawn, you got a box of pistols, and Sir Frederick is nowhere to be found. You're in an open field, you can see for miles. Neither he nor his rotund spouse are anywhere to be viewed on the landscape. He didn't show up. You're safe. No need to sweat. Well, in this example, that was a very weird example, by the way. I don't know where I'm pulling these examples. Jesus and duels today. It's a strange webinar. I apologize. When the software draws the stop line for the counter trend signal, I'm going to go long just on the other side of that stop line. Because if it breaks through this line, it's telling me that the people who normally sell are nowhere to be found. And I want to participate in the trend. And so it's safe for me, possibly, to walk up and place along. I will put my stop 1 to 2 ticks below the puncture candle. And then I will hold my position until the next time, until the next buy time. Now, I get a lot of questions where somebody says, for example, if you're long at this first buy signal, can you hold it and trail it and see if you get a puncture? The answer is yes. But for the purpose of my demo, I like to keep the rules very simple so we can see setup by setup what's happening. So that's what a puncture is. And I don't like using this slide because I've used it 100,000 times. So with that in mind, let's look at a couple examples now together and see how we might have approached the markets yesterday. On the E-mini NASDAQ, we'll get rid of all of my hand drawings. And I want you to follow through with me. I'll go through not at warp speed, but a little faster than I might normally. At 920, the exponential moving average, the 120 period EMA, is blue, signaling a downward slope. We enter at the close of the candle short, and we exit by 9:33, resulting in a net gain of $20.25. Our stop was 1.5 ATR values above the high of the candle. Remember, I gave you these times and directions 2 days ago. I gave you the rules for the system we would be applying to the future times 2 days ago. You had a trial. You saw it live. At 9:33, we do not hit the puncture line. We do, however, have an opportunity to short again at 9:38. The market is more volatile after the open. The range of the bars is larger, so the stop is farther away from the 9:38 candle. We're going to exit by the opposite time at 9:47 for a net gain of $10.50. 9:50 comes along, and we don't hit the stop. We come within a tick of that blue line, And then finally at 9:58, a net loss of $17.50. Womp womp. You will have losses. These things will happen in your life. If you're looking for a fake 90% success rate signal, I am not your guru. So there are going to be net losses in these programs. The next signal at 9:58 rather does not hit the puncture line. And now we wait 1, 2, 3, 4 minutes for the 10:03 signal. We enter and we close by 10:15. We'll put our gains at the top and our losses at the bottom of the screen as we track the US morning session. At 10:15, the buyers show up. We can see that they're holding this support level. This is where profits are being taken, and the shorts are being covered until the pullback at 10:25. This is a signal with trend. It's a selling pressure signal aligned with the 120 period moving average. We enter at the close of the candle. We exit at the close of the opposite candle, 10:38. That's a $46 move. And again, it's worth mentioning the signals were available to us 2 days ago. The rules that I'm showing you for the setup, mechanical discretion-free rules, were published 2 days ago. All I'm doing with you is reviewing what happened. We enter at the close of the 10:45 candle, exit by the 10:58 candle, $18. It does not puncture the white line, it touches it. 11:09, we enter at the close, we exit at 11:17, net loss. Touches the line, comes up, punctures it. And now we hit our stop above the puncture candle for a net loss. Womp womp. 11:37, we enter at the close of the signal with trend. We exit by 11:44, $19 net gain. We enter at 11:52, we exit. Come here, get in there. We enter and we exit. It's about a 50-cent net loss. 12:02, we enter at the close. We exit at the close. If we count that, that's end lunchtime, so we'll leave that one alone. But that would be a net gain, and the 12:26 as well. 20, 30, 50, let's call it 100, 115, 135 minus 11 is 125, 24, 116, 100, and let's call it a little under 100 NQ points. So we'll say just shy of a hypothetical $2,000 gain per contract with the full size contract, or just shy of a $200 gain with a micro. Any questions about that? Because it's important to remember, these were not signals that appeared live during the market. They did not appear the way your historically garbage indicators normally operate, where they appear later, they disappear and reappear. That's not what this is. This is a weatherman on TV, in this case my webpage, saying it's going to rain at 10:45 on Wednesday. And at 10:44 and 59 seconds, you look up and a drop is falling inches from your face. That's what this is. We move forward into today. And we'll do the same thing. I will bust through this quickly. Enter, exit, plus 13. Enter stop, minus 24. Enter loss, minus 6. Enter exit, plus 13. Enter stop, minus 16. Enter is closing below the moving average. We're in it, we're in it, we're in it. Net loss, $10. Enter signal with trend. Exit, 11:15. Puncture, little tiny stop, minus 5. 11:31. Enter. Exit by 11:12. Enter at 11:49 for a small loss, and we lose $4.50. 27, 57, 58, 88, 94. We'll go down now. 90, 85, 75, 60, 54, minus 24 is 30. Let's call it plus 20. So $20 gain is $400 per contract in the same period of time on the full-size contract, and it is $40 for the MNQ if you're trading the micro. The settings for this chart are the default settings that I use in the webinar every week. This is a 714.00 with a swing strength of 8. 714.00, swing strength 8 calendar days. If you're using this at home, those are my default settings. So if we analyze the signals from today, not counting the overnight early morning London signals, oh my gosh, if you traded the European session, you had a much better session, right? From the beginning of the London to the open of the US. And then the US session yesterday, you're looking at almost $2,500 in potential profits using the signals and the setup that we taught you. Any questions about that? Any questions about that? It's kind of hard to believe. It hurts your head when I say it out loud. So I wanted you to see the difference between the signals, right? If we come into the program and we close out the moving average and we just rely on this idea of time by itself, is there a way on God's green earth to know in the future when the moves are likely to occur in the largest market we can analyze, right? Forex, the Euro US, it's so deep. We're looking at millions and billions of dollars of trades going through. And when we do, 60 to 70% of the time, the thing that we're waiting for is actually happening. But there's no rules associated with that. When we apply a very basic setup to the signals, we have the beginnings of a trading plan, right? And that's what I want for you guys. I want you to have signals that you can follow, like these gold signals, and know when this happens, I go short. When this happens, I go long. And so as we kind of move through the signals, you can look at yesterday's gold signals. We can look at today's, doesn't matter. When the candle closes, I enter at the close of the candle. Steve, I get out at the close of the next candle. No puncture. At 9:10, I get in at the close of the candle. I exit at the next signal. 9:30. At 9:30, you will notice that this example I drew by hand bears a striking resemblance to what happened in gold. The puncture is reflecting the, what's the word? The abdication of the behavior pattern. At 9:30, they're supposed to go sideways or go down. Sideways indicating profit taking until 10:15, down indicating reversal of trend. And at 9:30, the behavior pattern that kept getting found week after week after thousands of bars of analysis is losing credibility. We're on the field with our pistols ready to go. We look to the north, there's nobody. We look to the south, there's nobody. East and west, we're all alone, and it's safe. And so we enter at the puncture of the blue line. Our stop is 1 to 2 ticks below the puncture candle. It never comes back to that level. And we finish at the close of the 10:15 candle up $26. So that's a $2,600 move. We enter at the close of the 10:15 candle. If your huevos are large enough, the stop is down here. And we're going to exit by when? The 10:55 signal. That's a $3.50 move. So nearly $3,000 available in gold yesterday using the signals the way that I'm teaching you in the setup. And we can go back in time and see that it's not a bad strategy, that these moves in the direction of the trend continue to happen. And when they don't work out, they're small losses in comparison to the large gains. And if we crunch up the chart, you'll see here, there's the first puncture, small stop, and we're out, -1. There's the next puncture, and we gain until 640. Signal with trend, exit by 8:05. So plus $3.70, plus $8.70, plus 14, -1.7, -5.1. That is the hallmark of a trend trading strategy. Larger winners, smaller losers. Any questions? Any questions about that? I'd like to show you a system, a setup today that occurred. On the ES, I was debating whether or not to show this. And I want to go through, there's the YM 3-minute signals. We can go through that, Andrew, but I want to look at the ES 3-minute if I could, because I think something interesting really happened there today, if that's okay with you. Chirag, according to your earlier WebAir webinar, when there is a buy signal and up candle, we can go counter trend. I would have to look at what you're referencing, Chirag. At this point, that doesn't sound right to me. But if you have a clip or a recording or a YouTube video with a timestamp, I'll be happy to look at that for you. E-mini S&P 3-minute chart. Long at 633, out at 712. Puncture, exit, no gain. Long at 736, out at 757, gain of $1.50. Long at 818, just before the econ, we lose $2.50. Short at 848 until 906, plus 2.25. First puncture trade hits the stop above the puncture candle. Second puncture trade, we are short through the line a second time, and now net gain of $5.75. Now here's where some weird stuff starts happening. We're short at 9:45 and we have a large loss, $5.50. We're not long, not long, not long. There's our puncture trade, small stop above the puncture candle. Then our second puncture trade comes up, comes back down, and we have a net loss of 50 cents. Now, Luke, pay attention to this. Jim, this is something I want you guys to focus on because you might have missed it. At 10:57, we enter short. Now watch, we hit that stop line, minus $6. It's not looking good for Michael in this webinar, is it? Now check it out. I want to refresh your memory with this example before we continue. A puncture trade can exist when we're above the trend line and the blue stop line is hit. Jim, does this make sense? A puncture trade can exist if we're above the trend line in the case of a selling signal and we blow through the stop line. Well, here, look at what happens. At this point, we broke through the blue stop line. And then, Jim, right here, that candle closes above the moving average. Now, when it closed above the moving average, it makes this blue line puncturable. And we came down, Jim, and we hit the blue line. And so now I have permission, using the rules that I taught you, to enter at that blue line. It comes back and it touches it right there. That would be your entry. It never gets to the stop, which would have been below the puncture candle right here. And then we exit by the close of the next signal. Let me say this again, because some of you might have missed it. I watched it when it was happening live, and I realized it was possible to do what I'm showing you. We're stopped out here at 10:57 in the same way that we're stopped out at the two puncture signals over here on the white line. We puncture the blue line. The candle closes above the moving average and then pulls back to the puncture line. My stop would have been here if that blue dot was above the moving average. And so this is the crossover puncture. It's a hybrid. You're allowed to do it using the rules that I taught you. And so that would be the signal on the E-mini S&P today up until lunchtime. So if we started at the open, where does that occur? 9:30 would have been 9:45 signal. You would have had +5, -5, -7, and then +20. So it would have been about a $10 to $13 day if you just traded the US morning session. Any questions about that? That one kind of hurts your noggin a little bit, but I wanted you to see that it was a possible entry in the fullness of those rules, right? Any questions about the E-mini S&P today? Right, it was a little clearer yesterday. It was a little clearer yesterday. So yesterday, no puncture at 8:33, short at 9:21, and there's the stop. Long at 9:48, it pushes up, double top. Oh, it's the stop. Short at 10:18 until 11:06, +7. Short, well, just falls outside the lunchtime thing, but that would have been your short there at 12:03. All right, so you're basically 7 minus 1. You're basically a negative $200 day yesterday on the ES, negative $200 or $300. And then today you're up, what do we say? 10, 13. Any other market we want to look at before we start to wrap up this afternoon? anything that perplexes you about anything we're talking about here today? This is a very quiet webinar. Not too many questions. This again applies to stocks. Right now, I am looking at a potential launch in Tesla. If you're a counter trend trade, we look at the last several times there were buy signals in Tesla. The biggest one, of course, January 24th. We did see a move up off the low. And now I'm looking at a potential rise now from April 5th until April 14th, for example. All the signals in the webinar, with the exception of my ES daily chart, are 7/14/00 calendar days with a swing strength of 8. Yeah, Chirag, the system comes with templates installed when you purchase the software. And if anyone ever has questions, the neat part is that we have two options available to you. Number one, a Skype community filled with Warp users who are sharing their settings with each other. And I also participate in that community and can get you settings or templates. Sure. So, for example, I can come here right now, right click on yours, copy email address, compose, paste as plain text. And I can give you the template I've been using for the webinar here today. Chart. I actually named it AAAAA because I use it so often. I don't want to type any more than the letter A 4 times. So yeah, that's the template. No, congratulations. That's the template that I use in this webinar, Chirag. Thank you for that question. And if you have any particular questions about a market, just email me back and I'll let you know. The moral of the story is this. Trading is ultimately an endeavor to exploit a statistically relevant edge over and over again and trust your rules. The advantage that we have, that we give you, is your edge is predictive. It is not something that appears in real time. You know when it's coming. You know what direction. You know what your risk is in the moment. You know how much time you need to sit in the trade. Is it 3 minutes? Is it 30 minutes? Is it 3 weeks? Those components empower you physiologically, empower you psychologically. There's less fear, there's less hesitancy, there's less double guessing. I am entering the market now because the last several weeks at this time, a behavior pattern has emerged. For some reason, institutions have been driving the price of my market up for 14 minutes, for 14 hours, for 1.4 minutes. My entry is at the close of the candle. I have a stop. I have a limit order prepared. I will drop it on the close of the candle in 3, 2, 1. Order filled. Reduce your slippage. Use limit orders at your entry because you know the candle will be closing soon. What do I do once my order's filled and my stop is in place? Nothing. Make a sandwich. How much time does your trade need? If it's 15 minutes, get up, walk out of the room, do a couple chores, Get some sunshine, clear your head. Banks want you sitting at the computer every second of every day, just like the blue-haired grandmas in Las Vegas are sitting at the slot machine 14, 16 hours straight. You make mistakes, you get tired, you overtrade, you revenge trade, you're angry, you fear trade, you move your stops. All of those things are ameliorated when you know when the signal is coming and why. This blue dot is here because it almost always falls lately at this time. When I look at my signals day after day, week after week, I see 6 or 7 times out of 10, the signals are reliable. Inside the constraints of my trend trading system, my expectancy is 52 to 55%. My profit factor averages 1.5 to 2.0. If I follow my rules, the model will lead me to profits over time. That's the difference. That's the system. Dorian, Dave can give you a call. If you post your number in here, Dave's actually the person working with him, and he's going to want to know what's going on. Reverend Jason, I believe, was the guy's name. Just post the number you can be reached at, and Dave will give you a shout. Ultimately, this was the question that I wrestled with as an engineer nearly 15 years ago. What is trading? Is it about looking at indicators that told me what just happened? Is it about following gurus who have extensive marketing systems and knowledge? Or is it about wagering where the market will be in the future? Because if it's about where the market will be in the future, then looking at things that told you what happened in the past is like looking at a telescope in the hole and there's paint on the other side. You can't see the future with a lagging indicator. You can't see the future with delta and market order flow and volume and support and resistance and candle patterns and pullbacks and fibs, lions and tigers and bears, oh my. You can't see the future. But if there are times that repeat in the past and behavior patterns are established, you can see the future, statistically speaking. You can be proactive versus reactive. And this is what I believe trading ultimately is. When most people wake up tomorrow morning, they will walk over to their computer. They will have spent $2,000 to $3,000 on cutting edge technology, fiber optic cables with gigabit transfer speeds and redundancy to satellites and DSL lines. And they will sit down and they will load their charts up with MACDs and RSIs and stochastics and zero lag JMAs. And their screens will look like the display at Epcot Center. They will talk themselves out of every single setup that looks good at any given point in time. 5 signals will look opposite to the other 5 signals. Their guru will be shouting in their ear and they will lose more money and wonder why. Why they couldn't take money from the likes of JP Morgan and Goldman Sachs, who have teams and armies of programmers and algorithms who get routinely fined for spoofing and manipulating markets. Your chances are slim to none. 15 years, I talk on average to about 1,000 traders a year. I can tell you the story. It's always the same. It doesn't have to be. It doesn't have to be. I want to thank everybody for hanging out with me here today. Yeah, Dorian, what's just give me your email me your phone number real quick. I don't know that I remember it or have it. I can look it up on the computer too. Not a problem. So just to review, 2 days ago, I sent about 40,000 people the forecasts for the markets that we're looking at here today. When we came back after the fact and reviewed what happened and we applied basic trading rules to those systems, when we look back and determine whether or not the signals could be relied upon to tell us in the future what to expect, we saw the raw signals aligned with our expectations about 60 to 70% of the time, proving, I believe, beyond the shadow of a doubt, that markets are rigged. There is a plan. Before the reports come out, they know. Before the news release, they know. The question is, tomorrow, Monday, do you want to be surprised? Or do you want to have an inkling, an awareness of what's coming down the road? What's that great line from the movie? The light at the end of the tunnel isn't heaven, it's the A train. If you want the stocks on NinjaTrader, Chirag, there's a great way with Ninja to do it. You'll go to your connections and you'll see a place where it says kinetic end of day free. Kinetic end of day free. If you activate that, it'll connect to NinjaTrader's daily bars. And if you do that, you can load, I believe, any one of 500 different instruments. For example, if we look at GE, when you're loading daily charts, make sure you load 10 years worth of signals. So make it 3,650, and then pick whichever stock you want to analyze using the template that I just sent you. And you'll be able to get those analyses for your market. So here's GE, for example, using the free kinetic end of day data. And Chirag, you'll be able to see those signals in the future as well for your investment portfolio. If you have accounts with other brokerages, for example, and you want to reference this, you can. All right, so make sure when you load it on a daily chart that you have at least 3,650 days for the data mining to occur, and just apply the same template. Great job, and welcome on board as a customer. I really appreciate your order. Woo! Okay, thank everybody here. I appreciate your time. We'll keep it short today. I want to help. Two engineers got together and asked the question, what is the market? Is it a fair place where everybody's held accountable and plays by the same rules? Or is it the other thing, the darker thing, the place where people who have power exert their power on the people who don't have power and take the money from those people as often as they can? And instead of getting caught and going to jail and doing all sorts of penance, the people who are supposed to monitor the system are also corrupt and allow these abuses to continue. I think it's the second one. And if you believe that's true, you should use tools that align with your worldview. And if that's something you're ready to do, and if you've seen enough miracles today, I'll show you how to get started. Thank you, Chirag. On our website, you will see an opportunity to come on board here. Back to the Future Trading.com. The product that we're talking about is our flagship product. It is the TachEon Warp program in our product store. If you scroll to the left and click on the Learn More button, you'll see a few of the things we spoke about here today described, as well as the link to the webinar you're a participant in. At the bottom of that page is an orange Buy Now button, and if you click on it, you'll see an opportunity to join our weekly training room. Meets Tuesday, Wednesday, Thursday, spearheaded by one of two people, Colin out in the UK, who's a customer who trades our software profitably, and my business partner and best friend, Ron, who's been running the training room for years and years, over a decade now, also a trader. If that's something you want to participate in, there's a 25% off code applied to that room with your purchase. It meets Tuesday, Wednesday, Thursday, 8 to 12 Eastern. If you don't want it, don't get it. Click on continue, read through our purchase agreement, and then right here where there's an opportunity to do so, WARPOFF, hit apply. The promo code is WARPOFF, lowercase, no spaces, warp off. Takes $500 off of the price. This comes with 2 computer licenses, unlimited updates for TachEon Warp for the lifetime of your purchase. There are no maintenance fees as of yet, no kind of yearly recurring costs. You're going to get access to our free video training archive, where all of the videos that describe everything I've been telling you are available to watch so you can learn at your own pace. We do have mentoring and training opportunities available for those of you that want to go deeper with myself or with Ron. We can always meet with you and help you formulate your trading plans, set up your charts, and your purchase comes with free installation. Our associate Rachel will meet with you live via GoToMeeting one-on-one to make sure, if you want, all of the programs are working okay and everything's running copacetic. Thank you for your time. I ran a little bit over here. I appreciate your patience. I look forward to working with you. If you've signed up or are signing up here today, you can let us know. Also, if you have any questions whatsoever, I'm going to give you a name, an email address, and a phone number. I have a great friend here working with me, David at backtothefuturetrading.com. Dave's been working with customers and traders with our company now for a long time, and he is fantastic in terms of helping people get started and helping them figure out ways to get on board. Let me get Dave's phone number here for you too. I always say I'm going to have this ready in time, and I never do. There we go. His number, if you want to actually call him, is 727-742-2626. If you have any questions related to your purchase before you get started and you need to talk to somebody, Dave is the guy. If you get a call from him, can you do me a personal favor? He's not trying to be a jerk. He's trying to help you out. And so please, please return his calls, answer his emails. He's not like the other guys. He's trying to help. So it would help me a lot if you text him back or call him back if you told him you were interested. Don't make him chase you all over the world and call your grandma and leave a message with the UPS driver. Just answer him back and let him know what you're thinking and doing. I appreciate that. All right. May the wind be at your back. May the beautiful golden yellow sun shine upon your handsome and beautiful faces. You're all beautiful and handsome. I love all of you. May the wind be at your back, the sun be at your face, the valleys rise up to meet you, and the mountains lay low before you. I wish all of us here peace, prosperity, health, fellowship, all of your dreams. Hope we can be a part of that and help you achieve the goals that you've set for yourself this year and beyond, so you can write your own 4- or 5-star review in the coming weeks and months. Thanks again for my existing customers. I appreciate you. You help keep the magic moving and help us reach new traders. Always grateful for your support and your ongoing participation in our education programs like this. Take care and continue to spread the word for us. When you refer people, it helps us out a lot. We don't market very much. And that's it. We'll see you guys same bat time, same bat channel here Thursdays, 4 p.m. Eastern. You've got a few weeks left in your trial with those times. Take advantage of them. And if you have any questions, let me or Dave know. we'll get you squared away. Have a great week, everybody. Take care. Bye-bye.